Hello everyone, it's a beautiful Wednesday morning and welcome back to another episode of Capital Markets Quickie. I'm your host, Endrit Sella, and today we're unpacking a tough day on Wall Street as April bids us a not-so-fond farewell. So, let's get right into it. The markets didn't hold back their drama yesterday, with all major indexes taking a steep dive. The Standard & Poor's 500 slid by about 1.6%, while the Nasdaq Composite took a sharper turn down, dropping 2%. Over at the Dow Jones Industrial Average, things weren't much better, as it fell by 1.5%. Bond markets felt the heat too, with the yield on the 10-year Treasury ticking up to around 4.69%. Now, what's behind this market mayhem? Well, new labor data dropped some hot coals into the mix, showing a spike in employment costs that outpaced expectations. From December to March, we saw the employment cost index rise by 1.2%. That's the biggest jump in a year, folks. It's clear that high wages are still fanning the flames of inflation, adding a wrinkle to the Federal Reserve's plans. Everyone's eyes are now on the Fed, which kicked off its two-day meeting yesterday amid these fiery figures. But it wasn't all doom and gloom. After the bell, Amazon gave us something to cheer about with its earnings report. The e-commerce giant not only beat expectations but did so with some impressive numbers. Here's a quick rundown. Net sales hit $143.3 billion, cruising past the $142.6 billion forecast. Adjusted earnings per share, 98 cents, beating the expected 83 cents. And let's not overlook Amazon Web Services, pulling in $25 billion, topping predictions once again. Despite Amazon's shine, the broader market sentiment remains cautious, weighed down by rate hike fears and economic headwinds. As we wrap up today's chat, remember, this week is far from over. We've got the Fed's rate decision on the horizon and more earnings to digest. Will the markets rebound, or is there more turbulence ahead? Thanks for joining me on today's quick dive into the market's moves. Tune in tomorrow for more updates and insights right here on Capital Markets Quickie. Stay savvy, stay smart, and let's navigate these choppy waters together.